ladies, and thank you for joining our Smart Women Savvy Money group. Why do we call you all smart? Because you all smart. And our intention is to help you to get savvy about managing your financial life here at Urban Wealth Management. So thank you for joining. And as you know, our Smart Women Savvy Money group is really, really important. We have been in existence since 2012. And this group that we started back many years ago was really intended to help you all get smart about your financial life. We always have fantastic, fantastic speakers and a variety of videos, podcasts that you will be able to access all the time. As a matter of fact, if this is the first time you've been to our site, you will be able to see, for example, a variety of topics that you can designate. First and foremost, you can check on our Smart Women Savvy Money group so that you will know what is this all about. And also, you can see all of the blogs that have been posted for a variety of years on a variety of topics. And if there's something in particular that you want to know about, you can designate anything here. In addition to that, as far as the webinars that we have done in the past, you will be able to see what those topics are, our speakers, their backgrounds, etc. That's pretty significant. And you will be able to also select the variety of topics as well. So with that said, want to also make sure that when you come into our site, that you, again, if this is the first time that you've come in, you can see what our directives are, what our services are, and how we work with you. And we are a fiduciary firm. So with that said, next, I'm very happy to share with you today's speaker. And this is so important. Bobbi Ivanova. This is so important because this month of October, as we all know, is breast cancer awareness. And this is such an important topic. In addition to that fact, here's what you need to know. But also, Bobbi is going to be speaking about some significant investment opportunities for you all to be aware of in this industry, because of the firm that she is with, which is Simplified. You will know and learn a lot more about investments in particular. And this particular ETF, one of them that she's going to be focused on, will highlight some of these companies in this industry that are supportive of breast cancer. With that said, Bobbi, turning it over to you.
Thank you so much for having me, Renee. Hi, everyone. My name is Bobbi Ivanova. I'm an investment strategist and managing director at Simplified Asset Management. We're a relatively new asset management firm, about 3 years old, and we manage about 2.6 billion in assets. So, on today's topic of Breast Cancer Awareness Month, let's start with some of the things you need to know. So, first, let me find a quick presentation. So breast cancer awareness, like I have some stats here on the first slides for you. So I think important to acknowledge that mortality rates for breast cancers have been declining for the last 35 years with about 40%. But like seeing some of the stats on the table, we still have long ways to go. And particularly when you look at that 1 in 8 women in the United States will be diagnosed with breast cancer in their lifetime. That's a pretty staggering number. And I know the first time I saw that, I was quite shocked. And we know breast cancer is the most common amongst females in the United States and the world. And there's been a lot of scientists at this trying to solve this for a long time now. But what can you do as a female? Well, the simplest thing you can do is get screened. I know I'm actually getting my first mammogram later this month, and decided to pick October is an easy way to remember to do that. And hopefully the scientist will solve that problem. But I wanted to highlight a very special fund for us that is related to breast cancer, really on the topic of impact investing. So, first, actually, what is impact investing? So, impact investing seeks to generate social and environment impact that's measurable alongside financial return. And this really was for us a couple of years ago when we were thinking, how do we simplify, make this measurable impact while achieving financial returns? So it's really having that dual mandate. How do we do that? And what cause do we want to support? So, as a actually 1 year old asset manager, we're like, why don't we launch a fund that donates all of its net fees to a cause? And that sounds like a really rational thing for us. And at the time was like, okay, well, what cause should we choose? And it was breast cancer. And I know all of you have been touched, your families or friends, by some form of breast cancer or other cancers. But for us, breast cancer was just hands down the cause we wanted to support. We just happened to have a lot of family members or team members that have been impacted by breast cancer. And at the time was like, who do we partner with? That was the next thing. And it was Susan G. Komen Foundation. So they're actually the world leading breast cancer organization. And the foundation actually focuses on cancer research, community health programs, and public policy initiatives. So this is actually how PINK, which is our Simplified Healthcare ETF, got started in October of 2021. I'm highlighting here the bell ringing in New York Stock Exchange when the fund launched. And it's just been such an incredible experience for us at Simplified being able to do this and actually donate to the cause as well as bring really good financial returns for the underlying investors. So let's dive into the fund a little bit and we're going to talk about what actually Pink is. So Pink is obviously a pro bono fund, as I mentioned, but it's actively managed healthcare ETF. So it invests in biotech, medtech, and other healthcare sectors. The goal is seeking long-term capital appreciation. So while we're investing for the cure, we're also trying to do the best for the shareholders. We're doing our best to produce superior returns. The fund is managed by Michael Taylor, who has over 20 years of experience in hedge fund industry. He actually was managing Millennial and Citadel healthcare book, and it's very experienced in the healthcare stocks. A fun fact about Mike Taylor, actually, he started his careers in the 1990s as a scientist, was developing predominantly gene therapeutic drugs for the pharma industry. So he does have that lens of a scientist when he's actually looking at those companies and the research and the innovation that they bring. So how Mike is investing in the fund, he will pick anywhere from 50 to 100 healthcare companies, use your fundamental analysis or bottom up, which identify high quality companies that have the most compelling opportunities. And he actually combines it with a top down approach where he just analyzes the macro factors as well. So the fund expense ratio is 50 basis points. This is really what we are basing our annual donation to Susan G. Komenov, and we are guaranteeing them 100,000 a year, which we just donated our second annual check a few weeks ago at our annual conference in New York. So it's a great partnership to work with them. A couple other things to highlight. In healthcare is a general, it's a defensive sector. So what does it actually mean is that when we have economic downturns, it tends to perform robustly. And where are we at right now economically? I mean, there are some economists on different side of the story at the moment, but we know that some of that fiscal stimulus have been depleted. like debt levels are rising, credit card usage is going up, as well as we've seen company bankruptcies going up. So this means from a stock market perspective, we can expect pockets of negative earnings revisions. And healthcare tend to have a pricing power, and it looks very attractive. On the other side, we know the Federal Reserves have been on a continuous Fed hiking rates, pushing companies' cost of capital up and making it harder to refinance. So another thing we're currently worried about is credit risk. And to pile it on that, we can just add the new geopolitical risk over the weekend with the conflict in Israel. Um, just a couple of macro updates here, but also wanted to mention the interesting thing about healthcare is their possibility of disruptive breakthrough that can lead to good performance. And currently in the fund, I want to highlight a few of the pharmaceutical companies such as Regeneron, Sanofi, and Eli Lilly that all specialize in oncology and do breast cancer research, including other diseases. They're not just solo doing cancer research, actually. But Eli Lilly just recently announced their acquisition of Point Biopharma, just really extending their oncology capabilities. And they also, earlier this year, they've launched a new type 2 diabetes drugs that has shown incredible results in weight loss. So it's pretty exciting time right now. So if we're curing diabetes, why not cure cancer next? And all of these companies that I mentioned, they have a very robust pipeline of cancer drugs coming out. So hopefully, continuous research that will happen. I do have a slide on each of those three companies that I mentioned. We're not going to go into detail, but we will share the presentation. So if you want to read through that, you will be able to take a look at those three. As well as Mike Taylor, who I mentioned, the portfolio manager of the fund, and his bio. So let's switch gears a little bit and share a little bit of how simplifies democratizing access to alternative investing. And this is really our mission. So we were founded in 2020 to make institutional grade alternative strategies available to all investors through a low cost and transparent ETF vehicle. And really why that happened was on the back of a SEC rule change, which allowed the recreation of those alternative strategies in the ETF wrapper. And ETFs, obviously, you're savvy women, you probably know daily transparency, liquidity. There's no complicated K1 tax form and very competitive fees on the structure. So I do want to highlight some of the innovation we're bringing through investors and some of the things we're currently seeing a lot of interest from investors right now that work great in the current macro environment. So we're going to start with category Cash Plus or our Simplify Enhanced Income ETF. So really simply, it's a short-term treasury. So everybody knows what that is. And we're actually adding a little bit of a put or call spread selling on top of it. So how we designed this fund is using a systematic approach that we identified which options are overvalued and creating a diversified basket of exposures. And what we're trying to do, just really maximize that risk return profile. We do have active management oversight on the portfolio where the portfolio managers are monitoring the positions. We're really trying to create income with no credit risk and very low duration risk, which is quite appealing right now. I want to touch on the robust risk management framework we have in the fund. So we do option spreads, which is for identifying max risk. We also do different asset classes within the fund. So there's equity and fixed income. We do combinations of puts and calls, another diversification. And we also ladder our position, basically stagger them over a weekly, so we don't have all of the options expiring at the same time. We have stop losses triggers, which basically mean we can close a position early if the market moves against us, as well as we can close a position early if we made the majority of money in the profit of the position, so limiting risk that way. I do have a quick slide of overview how this is actually all paying off, all that work behind the scenes that our portfolio management team does. Really what I'm comparing here is normally you will see income being generated by credit or by duration. So if it's shown on the chart, high is delivering higher income, that's the monthly distribution of 9.63, with a lower volatility if we compare that to the 20-year treasuries, which have the duration risk, or the high yield index, which has a credit risk. So highs basically turn volatility on his head by selling in order to obtain high income with lower volatility. And I know current macro environment's not super advantageous for having a credit or duration risk. And why take it if you actually don't have to when you have alternatives like high? Another fund I like to mention is equity plus color. So basically, it's just a low volatility equity exposures. So we start with using a passive income, passive equity plus equity options color to risk mitigate. Ultimately, the fund uses 3 colors to smooth off some of that timing risk. And the idea is, can I stay invested with having embedded protection and while still participating to some degree on the upside? And I have a chart here showing how we actually do the colors, but basically selling some options, buying protection. So what does it mean? You don't fully participate on the upside, but you're buying protection in a costless way because of the premium on those different options basically cancels each other. We have seen investors particularly interested in this fund that are more conservative or they dislike volatility or being just more defensive given our current macro outlook. So, for example, in the 2022 drawdown in equities experienced, HEQT was half of what S&P 500 was down. So it's a good way to protect some of your capital there. And lastly, I want to highlight another strategy. It's our commodity strategy that could work really well as well. So normally commodities are known for low correlations with stocks and bonds, which actually just means that they're a great diversifier adding to portfolios. And they tend to perform really well in inflationary periods. As shown on the chart here on the right, they have done great in an inflationary period. However, with commodities, there could be times when they're underperforming. So this is really the genesis of our simplified commodity strategy. So we wanted to create a strategy that actually has exposure to commodities such as industrial and precious metals, energy, and agriculture, but using systematic long-short approach to try to cut some of those left tails. Let me break it down a little bit. So first off, systematic means we're using algorithm, a combination of models to select the underlying positions. So it's not a specific portfolio manager that's making a call of what's going to happen with oil. It's just really looking at trends. And then we also can go short. So what does it mean shorting commodity futures? Is actually if the trend is lower, so commodity prices are going down. If we go short commodities means that we can have positive performance even when broad commodities are underperforming. So it's a great way to get exposure to commodity in a more risk mitigated way where you're cutting some of those left tails. I do have a little bit more details like here on the actual models underneath and the commodity exposures. The strategy actually trades daily, so it's able to capture some of those trend reversing. But again, you'll be able to see this later as part of the presentation. And if you have questions, you can always let me know. I wanted to share my contact details here, and thank you, Renee, for having me. But first, before I pass it over to Renee, I want to show you where you can find more information about us on our website.
And I love that title, Simplify. You want us to be simpler in developing in our financial lives. And so, yes, this is an area I really would like for you to highlight and to share with our smart women, Savvy Money Group.
Thank you. Yes, Renee, we have, as I mentioned, tried to democratize investing we've been doing a lot of education as well. Some of those strategies that we manage, they tend to be a little bit more complex. We use a lot of derivatives. And if you look on our website, even starting with Simplify 101, which is basically going over some of the basic terms. What is an option? What are the option Greeks? Where your savvy women can educate themselves and learn more about alternative investments. As well as we write commentaries on the current macro environment. You can find all of these here. Just click through it. It's a very short update, what we're seeing in the credit market update, for example. As well as research blogs that tend to be a little bit more detailed, that go into details of like how do you diversify portfolios, what are different instruments we use, and how you can actually access them. And lastly, what I wanted to highlight on the website is where you can find information of the underlying ETF. So under all ETFs, you will find current documentation. That's the really beauty about ETF, as I mentioned, daily transparency. So we're actually going to go jump to pink since it's Breast Cancer Awareness Month, and the page will highlight some collaboration with Susan G. Komen, as well as all the fact sheets and prospectus and other information. And lastly, you will find holdings on the bottom, which are updated daily as well. Some of the names that I mentioned, Eli Lilly's, Sanofi, or Regenera.
All right. Fantastic. Well, thank you so much for your time, for your expertise. And I am sure that we will be exploring a variety of different elements that Simplify offers to everyone. And this is such a significant month, and highlighting the fact that as Breast Cancer Awareness Month, that these different firms are supportive of women in this industry of breast cancer, the things that us as women, as mothers, have had to deal with, and that's unfortunate, the high levels. So in any event, thank you very much. And we look forward to exploring more and more about everything that Simplify does provide to us to make our lives simple, and on the financial side, in investing, which is really important, ongoing, that all of you all need to know what are the proper steps, the best means, have that appropriate background so that you can feel more confident as you are making your investments. So thank you, Simplify. Thank you, Bobbi, for your time.